We got weekly jobless claims and new manufacturing numbers hitting the tape as we speak. Rick Santelli standing by at the CME in Chicago. Rick, the numbers, sir.
Our initial jobless claims for the week of January 286,000, much higher than expected. And this follows, at least for the moment, an unrevised 230,000. Wow, 286,000. That really brings us back into some of the levels prior to testing those 50-plus year lows that we had under 220,000. And we look at continuing claims a week in arrears, 1,635,000. That's, of course, up from 1,559,000. That was not only a post-COVID low on continuing claims last week, but it was the lowest level in 48 years and lower than pre-COVID, which was 1.7 million. And if we look for Philly business outlook, Philly Fed for January, we're expecting 19, much stronger at 23.2. Last month was 15.4 to give you a sequential GPS. And here come the revisions to claims, and they're not very large. 230,000 last week only moves up 1,000, and now it's 286,000, and 1.559 changes to 1.551, currently now at 1.635 million. So subtle revisions, a big pop in initial claims, not so much in weekly claims, still under pre-COVID levels. But do remember, there's seasonal anomalies here. As we say in Chicago, if you seasonally adjust me, I could be 21 and 6'2". So you have to remember that these things make a big difference. Andrew, back to you.
Rick, thank you. We're going to get over to Steve Liesman, who's also looking at these numbers with some reaction. What do you think, Steve?
I think there's two things going on. Rick said it right. The seasonal adjustments is one issue. Around this time of year, things get a little squirrely. But the other thing I think is you're starting to see a little bit of Omicron show up in this data. We haven't really seen a lot of sensitivity of the unemployment claims to different waves of the virus, in part because everybody had unemployment claims in previous waves, especially because you remember they ended in September. So I think that's one. The other thing is it's nice to see the Philly Fed rebounding here and coming in strong, although the prices paid number was up and the employment index was down a little bit. But the new orders number was strong because the New York Fed number was not strong yesterday. So it's good to see Philly Fed doing well here, that the manufacturers are moving along. What I suspect is happening is, to the extent that they had to, employers let go of some workers because of the Omicron wave, but I think it's going to be very limited because of the tightness in the job market. So let's hope that this is the upper end of the impact of the Omicron wave on joblessness. One other thing, this is an important number because this is the number that corresponds to the survey week of the jobs number we'll get at the beginning of February for January.
Shepard Smith here. Thanks for watching CNBC on YouTube.